You go.
All right, that was the humor of Juan Perez and Marco. I added the little logos on there because it reminded me of what Nvidia's going through, a fierce bear seller attack. The bears are bearing down on Nvidia as well as all the other chip makers, and I'm going to break down the charts because I think the charts are telling us what to expect. And I recently talked about Nvidia, and I said in my last video, I said we are going to see $1,000 Nvidia stock, and I believe that we will. And I think we're also going to see Nvidia stock split. I think that's on the horizon as well. But in that last video, I said at a very specific moment in the video, I said, my specific go-to target as we near 1,000 is $968. That's where I'm targeting a threshold of resistance. We got right above that, I believe, at around 974, and then we got the world's ugliest candles started piling up right on top of that with the bear attack. And the fact is that this pressure is not just coming from the sellers, it's also coming from the rest of the pundits who are now beginning to point out every single flaw in Nvidia when just a week ago they were telling us it was a perfect company going on an incredible AI parabolic move. And I'm gonna examine a little bit of those news stories as well. But what we're gonna do is what we do best here, and that's the charts. We're gonna look at what the charts tell us. And I actually think that there is an interesting story, and then I'm gonna tell you guys where and when I'm buying. That's what I do on this show because this is the Stocks with Josh show. You don't want to miss a single video because every day we're either going to be talking about stocks or crypto, and we're looking at the big moves. And the principal thing is I share what I'm doing. It's not a recommendation for what you guys should do, but I'm sharing what I'm doing with my trades and why I'm doing it. And I'm definitely doing something with Nvidia because it's got powerful moves ahead of it still. And this is just the pullback that I also told you guys that we were getting. The other thing I said in my recent video about Nvidia was that to expect a correction, that we would get another correction sometime between now and that 1,000 mark. We would get another correction, and that's what this is. Now, again, we got to examine and see what the charts tell us about how deep or how long this particular correction might be. It might be different than the last two corrections, which were really more pauses in the up move. I believe that this will be a legitimate correction, but we're going to get into that when we get into the charts. The fact of the matter is that nothing has changed, that Nvidia may be the world's most important company. And on that note, the fact is that Microsoft recently surpassed Apple as the largest market share company in the world, right? And that's a major change. We got to stop and acknowledge what exactly does this moment mean? Has the king toppled? Is there a new reign? Why is Microsoft doing better than Apple right now? Well, I'll give you one reason, and today's video is not about Microsoft, but it's the fact that they are spending money on investing in AI. If right now Microsoft spent $10 billion, they kicked things off with the rise of ChatGPT, and I have heard that they are on a spending spree because they don't want to miss whatever the next big AI revolution stock is going to be. They don't want to miss it. They're sending out cash right now, and they know that this is their moment. Now, this is what got them into the #1 spot, but the ability to get there at all, and for the ability to AI to work, that's on the back of Nvidia. And so yes, Nvidia is still one of the most important companies right now to be watching in the stock market. And I do believe that they're going to continue to be because this AI craze isn't going anywhere. And that's what's going to ultimately drive us to a stock split. If you understand the charts on Nvidia at all, you basically see that this thing has been in max power drive going higher, barely slowing down. That's obviously not always going to be the case. It has to consolidate and digest the big moves that it's been making. It's not only going to go just up. Moving averages are like magnets. And what that means is that the price will get away from the moving averages, but they'll eventually come back and they'll either touch the moving average again and bounce from there, or they'll cross beneath it, swing low, and then come back and swing high. The moving averages are telling the story, and we're going to look at those as well. But right now, the two most important questions that I've got on Nvidia is, will it continue to dump? And is it part of a broader overall market correction or crash? And I'm going to try to answer those in today's video. Guys, hit the subscribe. Thank you for already hitting the like. I appreciate you guys. All right, the very last time that Nvidia got this overheated was when it was ranging between $400 and $500, and it came up into that space and we went into a correction mode. The correction mode basically meant that it went sideways. Now, in that time frame, before it took the next leg up, it went sideways in that price range between 500 and largely 400. It went sideways for 6 months. That was a long time. It was a long 6-month correction as we moved sideways within that range and eventually broke over 500 and had this massive move all the way up to near 1,000. And so the first thing I want to point out to you guys is be patient. Even if we rebound quickly, and I'm going to tell you guys exactly where I think we're going to rebound and exactly where we're going to go back up to here in just a minute. But even when that happens, what I want you to understand is I think this is going to be a proper correction moment. I think that even if we do come up and touch 1,000, it's not time for this to go from 1,000 to 1,200 or from 1,000 to 1,500. I think we're in an official sideways consolidation moment to digest the move that we had over the last year. And so I think that that could last a minimum of 3 months, if not as same amount of time as the last one, which was 6 months. Now, the next thing that we need to look at is when we went through this consolidation before, from the top of the peak, how far down did we go? Well, we went down 20%. And so it was around 20% that the buyers began to get excited again about Nvidia and kept pushing the stock back up. And so as we're going into what I'm going to consider a proper consolidation period for Nvidia right now, we're going to be looking ultimately for us to get back to a solid 20% discount before buying back in. Now, that we're not going to get that 20% right now. More than likely, we're going to get somewhere closer to 16% and we're going to bounce back up again. But we're going to find that over the next couple months, we're going to continue to come back until at one point in that time frame that I'm going to define at bare minimum 3 months, where at one point we're going to find in that time frame that we've come down 20% from the very top of our recent move. And so that's the big picture view. I just want to put out there that I think that we, off this last flag pattern that we just got, we're going to be in a clear consolidation period. We're no longer running up right now. Okay, that's what I think. And the only way for that view to change is if we just very quickly popped back above our recent all-time high. Then I will have to come back out and tell you guys, nope, it doesn't want to correct. We're still moving higher. But based on a couple factors, and I'm going to point those out to you, the two biggest being the candles. You got to watch and respect those candles. And when you're at the top of a move, and who would argue with me that we're not at the top of the move of Nvidia? We're at the top of a recent move. We've had a powerful move up, and it gave us a bearish engulfing candle. A bearish engulfing candle is one that opens above the last candle and closes beneath the low of the last candle. And we basically engulfed a bunch of candles here recently with Nvidia, and that's a clear bearish sign. Now, the first proof that it was going to continue bearish is that today was bearish, right? And I actually think that we should expect one more day and a little bit of a move down before we get that bounce. Now, that we could bounce tomorrow morning. We could bounce pre-market. We could dip pre-market and then bounce tomorrow. I think we're close to a bounce. Now, that bounce isn't going to be we're back up to going to 1,000. That bounce is just the range bounce. So keep that in mind. As I said just a moment ago, the first bearish candle we got yesterday was the engulfing one. The second candle that we got, which is neither bearish nor bullish, is the tall doji. That simply means indecision. It means that after we fell as much as we fell, the market was saying, hey, this might be a decent time to begin to average in. That doesn't mean that it won't go a little bit lower, but the bulls and the bears were beginning to fight it out 50-50, creating a doji candle, which is that the opening and close price is relatively the same. Nobody won or lost that day. Both the bears and the bulls finished the day at a tie. I wanted to get on some of the news stories. I think I made this point already, but I'm going to point out these news stories anyways. Redditor sees more value in these AI stocks than Nvidia and AMD. So first thing I want to point out is that the pundits are going to begin to beat Nvidia down while Nvidia is falling. That's when normally the CNBC pundits come out and say, hey man, this thing really is overpriced. In my mind, these are lagging talking heads. The fact is, I told you guys where we were going to hit the wall, and that was at 968. Now they're coming out saying, hey, this thing, man, it might not have any more room to the upside. The second news article I want to bring to your attention actually made a little bit more sense, but it pretty much was bearish as well. It said, is Nvidia stock becoming too volatile to buy? Best performing stock on the S&P 500 tests investors' nerves. And I think that was very reasonable. And one of the main points that it made is that the stock price was too far away and too far above the 50-day moving average. And again, remember, the moving averages are like magnets. The price wants to swing back and touch them. It either wants to touch and bounce or it wants to touch and break. This article was pointing out that it was way above the 50 MA and it was time for it to come home. Now, the other interesting thing that it pointed out was that the very last time we got a recent correction of around 14%, that it came very near to turning back to the 50 MA, but it didn't quite go and touch it. Instead, it kept moving higher. And so the point that it's making in that article is that the same exact thing could happen now. But what I've noticed in my years of trading is that you often get an initial fake out move that then is met with a push higher, but the next move does come back and touch the 50 MA. That's what I've seen as a pattern. And so I want you to keep your eye on that 50 MA. But where exactly is support and resistance? Where is the buying opportunity from the peak? Well, I'm going to give you guys 3 supports I want you guys to be carefully watching. The first one is 838, and we've largely come back or pretty close to that. And that was largely when we got back 13% from the peak. The next one is $794. Now this one is beginning to get a bit more interesting. This is very close to that 20%, and that would be an 18.40% pullback from the peak. And this is the one that I actually think may hold. It's the one that's closer to that 20% number where I think the buyers will be incentivized to come back. I think that's the support level. I think it will come down beneath, temporarily break through, but finish the day back above 794. And that would be one of my first re-enter buy signal confirmations for a move higher. Would be back at 794, meaning that we could get another $200 on that move, which would be incredible. But if it doesn't hold, which would be it goes beneath 794 and it closes on the day, then the next support beneath that is 760, which would be around 22%, which would be an additional 12% move down from 794. Now here's what's important about that. As we get higher and higher, the stock gets more volatile. And so if the last correction gave us 20%, then it's actually very feasible that this correction could give us a little bit more, 22%. And so the 2 support ranges that I'm going to be strategically playing is going to be around 794. And then if that does not get met with a high volume, high momentum move up, then I'm going to be watching to play the 760 range. Now, what I want you guys to understand at this moment is that I've given you support and resistance. And when I first started this show, I often would just give people largely support and resistance. But for you to understand the way that I trade, I use support and resistance together with other indicators. The number one indicator that I like to use it together with is the RSI. Now, one of the best places to buy for a long move is when you've been up above the 50% mark on the RSI. We'll call that bull territory. And we peaked above and got overbought 70%. And then we begin to get a correction just like we got now. And there's 2 places on the RSI that are buy potential signals for me. One is the 70% mark. So we crest above it, come back and hit the 70% mark and keep ranging higher. That's a very bullish move stock, and Nvidia would fall into the category of a very bullish stock. The next place would be if we broke beneath the 70% down to the 50%. Now, that's where my buying excitement or confidence is the highest, is when we come back and we bounce off the 50% for a good stock that's clearly in an uptrend. Not a weak stock, not a stock that's been suffering to get back above the 50% mark, but one that's been living above the 50% mark on the RSI for a long time. Let me know if you're learning a little bit more about these technicals on this page. All right, the last thing I want to attempt to answer is, are we in the middle of a broader correction with Apple and Nvidia coming off of its highs? It's a very important question to answer, and I'm going to give you an opinion on that here in just a minute. I'm going to take a quick station break for the MOOMOO investment app. Guys, if you need better trade tools, or if you just want to stockpile some cash to get ready to buy the Nvidia dip, you can put money to work by not investing or taking any risk whatsoever right now with Nvidia. They've got an incredible offer where they're going to give 8.1% interest to you just putting your cash in the account. They'll give that to you for 3 months. After 3 months, it drops down to 5.1%, but it's a pretty good way of making money without taking any risk and waiting for the best potential opportunity to buy. If you have been trying to get into Nvidia and you didn't have the courage to buy because it just kept going higher and higher, if we do get back to the support levels that I just gave you, you could sit some money to work, wait for that to happen. I told you that it could take between 3 to 6 months. 6 months was the last consolidation period, so it could easily take 6 months. If that happens, you could just let cash sit there for a long time, buy in at the appropriate levels, and then hopefully participate in the stock split in the days ahead. That's the way that I would do it. Check out the offer for yourself. It's available in the US, Australia, and Canada. Click on the link and check it out with your own eyes. Okay, is the broader market heading to correction? First of all, I want to acknowledge that I do not know the answer to that exactly, but I have a couple thoughts on it that are guiding my investment strategy over the next couple months. And it's two in particular. The first one is that we are in an election year. And that is a relatively safe environment for the stock market. And you say, well, why is that? Typically because the government is a little bit gridlocked. They're a little bit paralyzed by the fact that those who are incumbents are attempting to keep their positions of authority. And so they're not trying to do anything that upsets anybody. It's a low regulation environment. And in that environment, corporations will take advantage and they'll begin to move quicker and faster, knowing that it's a safe zone, knowing that between now and the time that somebody takes office by the end of this year, that they can do a lot. This could be an incredibly profitable year. And so as a result, election years have proven over time to be good times to invest. Now, when somebody gets into office, you could begin to find regulation beginning to ramp up pretty quickly. And it's interesting to me that the Fed is looking to raise rates. We're going to get a new president at some point, or we're going to get confirmation as to who the president is this year. Those two dynamics alone should cause a lot of investors to take caution as we go into the end of the year. But I'm going to give you guys one more historical fact to put on your radar, at least to give you a little bit of confidence in investing at the moment, and that's that the market typically has a 10% correction every 16 months. Now, the last correction that we just had was between July and October of 2023, which means that the next correction time frame that we might possibly get into would be between November and February of 2025, which just so happens to perfectly fit the narrative of the Fed raising rates and the completion of the election. And so that to me is the 3 strikes you're out, the recession is upon us, or at least a correction is upon us, or a crash is upon us. And so I actually think that even though these things have pulled back, we're still going to see them continue to do better in 2024. And I still see that it's not time to dump your bags and load up on assets like the SQQQ. Now, you can trade those inverse ETFs and make money, but I'm going to remind you that at the moment, there's still movement for these to go higher, which means that those products are not going to take off super strong just yet. We're going to see them come up off their lows, but it may still be a mixed environment of buying them. You may only want to trade them intraday. All right, guys, I hope that was helpful to everybody, and we'll keep an eye on the NVIDIA chart together, and you'll get more updates on the Discord. I'm going to post some charts going into this week. I'm going to spend some time there after I get this video up today. Got a lot of stuff coming down the pipeline. Hit that subscribe. Make sure you don't miss a single video. And as always, if you made it this far, throw in a like for me if I did a good job. Appreciate each and every one of you. Peace and blessings. Take care.